Walk us through why right now real estate's going to do it for me.
So I was here about a month ago. I'm saying it again. Real estate is a generational opportunity because real estate just doesn't go on sale that often. The last time we saw values depressed to this level was over 15 years ago. If you invested coming out of the Great Recession, you made 4 to 5 times your money in the appreciation cycle. We're seeing flows across our platform. I was here about a month and a half ago. We've seen $1 billion of flows come into our funds, which shows investors are excited.
But aren't things sort of cheap for a reason, right? There's the whole return to office and the questions about office space. Now we have questions about data centers when it comes to AI.
I'd say, look, even office is coming back and real estate is cyclical. Just to give you a sense of this, before I came over, I tried to make a reservation for a business dinner in New York, couldn't do it until March. The other thing we see is if you go on LinkedIn, job postings for remote work topped out at 20% of overall postings in 2022. Today it's 8%. So return to office is back, New York is vibrant, and we're gonna see holders of high quality office, the best office around the country, see gains.
This is actually a good kind of setup because a little bit later we're going to talk with the CEO of Partners Group and they've kind of been dabbling in this. But the whole conversation is about that proverbial dry powder, the cash on the sidelines, and the idea that people are looking for a home for it. And I know that a lot of big investors are looking to real estate. But where in real estate? It's not just Class A offices or multifamily, or is it?
Housing's a big thing.
Yeah.
We all know that we're 5 million housing units short for Americans in the United States, specifically in places like the Sun Belt where we see migration trends. We also wonder where people go on Friday afternoons. Typically, they're going to strip centers. They're getting their nails done, they're getting their hair done.
While they're watching Bloomberg Television, The Close.
While they're watching Bloomberg The Close, exactly right. But what's exciting is people want to spend money on experiences. So that's a big theme. And last is logistics real estate. People want their goods faster. So when you order on that phone, you want packages at your doorstep, and our investors love that we're invested in those segments.
I know. I ordered something on last Thursday, and it still hasn't arrived, and I'm like up in arms. I don't know what's going on. But in all seriousness, though, too, I think that the last time we had you on, we also asked you about data centers and all of the interest in that. As you might have heard, there was some news came out yesterday that seemed to sort of, at least, if not alter people's expectations about the AI trade and the data centers and the power that goes into all that. It certainly caused them to at least step back and take a closer look at it.
Data centers have been all over the headlines, but what you're seeing now is the pace of technological change. It's incredibly difficult. So a data center could be over $1 billion, but 2/3 of that cost is the power that's supplied to the data center and the infrastructure. So at our firm, what we look at is real estate, and we're able to buy real estate below replacement cost today, which is very exciting. We don't bet on technological changes and data centers.
So you don't have any exposure to that sort of build out?
In our fund, it's pure play real estate.
Okay. What is the allocation that you suggest that people have towards real estate in a portfolio?
So we love it. We see it in a
We know you love it, but what about my portfolio?
We think it's great because it's not correlated to stocks or bonds. So typically we see people introduce real estate to 10 to 20% in their portfolio in a regular 60-40 portfolio. It gives them appreciation, it gives them inflation protection, and it's a natural hedge for inflation.
I am curious. There's a lot going on in Washington, particularly when it comes to tariffs. And you mentioned logistics and things like that. Obviously, retailers, e-commerce companies are going to be affected if tariffs do materially increase or expand much broader here. Does that affect the real estate proposition for warehouses and logistics centers, et cetera?
I think it only strengthens it. So when you think about tariffs, think about supply chain efficiency, onshoring, getting goods to consumers faster. Things like industrial outdoor storage, infill warehouses, truck terminals, all these things help goods move around the United States to your doorstep to get that package you ordered a few weeks ago.
You're very optimistic, by the way.
He's very excited.
Is this like, and also, and I'm not trying to be glib about it, but is this like the best opportunity you've had in your career in real estate?
I would tell you we could be entering a super cycle for real estate, just given the current policy, the facts that rates will come down at some point, and the demand drivers that we see in the economy.
Well, let's end on that, because when you said rates coming down, like they're not coming down as much as we thought 6 months ago. 6 months ago, it was all about like rates are going to come down hard. This is going to be the moment. We're going to finally get out of the water when it comes to real estate that was underwater. But we don't have that anymore. So how does that make sense?
I would tell you, even if rates don't come down, the demand for real estate right now, specifically in logistics, industrial, and housing, is so strong that the cash flow gains over time will be a boon to the sector. If rates come down, it's just an added benefit for us.
All right, so you don't really care what Jay Powell says tomorrow then?
We always care about rates in real estate, but we know rates will come down.
Yeah.
How fast or how soon, we don't know.